What's up, guys? Hey, it's Clint Kuhns here, and in this video we're going to discuss 5 important steps when it comes to dissolving or closing down your limited liability company. Okay, let's get started. So here's the first and most important step. If your LLC has real estate inside of it, first thing you need to do, number 1, is transfer, out the real estate. You've got to get that out of the LLC before you close it, because if you close that LLC, you shut it down, and there's real estate left inside of it, you're going to cloud title to your property. That means it's going to make it difficult for you to sell that property or transfer it in the future. I've seen this happen time and time again to real estate investors. They shut down an LLC, they didn't realize they still had a piece of property into it, and it just really binds up their deal when they're trying to sell. All right, number 2. Pay Known Creditors. So if you know of any creditors of your limited liability company, make sure you get them paid right away before you shut that entity down. And so do a reasonable search of creditors, just show your due diligence that you went through, all your statements or whatever it may be, and you paid all of them. So that brings us to step number 3. After you've done that, you want to close your bank account. Now this can be an issue for people. I've had situations where people have called me up, they've shut down their LLC, dissolved it with the state, forgot to close their bank account. Now they can't close the bank account out because the LLC has been dissolved. Or the bank, what they'll do is they'll send the money to the LLC name, which is closed, and it kind of, it just gets caught in this circular position where you don't have an LLC set up with that name, so you have to go open up a new LLC in a different state with the same name, or possibly with the same state, depends if you can do it or not, just to deposit that money to pull it back out. So make sure you close your bank account. All right, the fourth thing here, follow your operating agreement. Just got OPG there. So there are steps that you must go through to shut down your LLC. Now, it depends on your operating agreement. It may state that you have a vote of the members and it requires unanimous approval or majority approval, or maybe it needs to be written. You need to have meeting minutes to back it up. I don't know what your operating agreement states, but you better follow that procedure. And here's why this is really important. This stuff's important to you is because if you shut your LLC down and then a creditor comes back at a later date, and they want to bring a claim against your company, and they want to look through it and hold you personally liable, they can do it if you haven't followed the proper formalities to shut that limited liability company down. Namely being, if the LLC states that in order to shut it down, you have to have unanimous written approval, and you don't do that, then that would be a way for a creditor to look through that limited liability company and bring you in personally. All right, so that means the 5th step that's the most important here, one of the most important, is to file articles of dissolution. So you want to file articles of dissolution to close that down. So what that means is you file it with the state. Typically it's going to be $100 to $300 to dissolve out your LLC. So you're going to shut that business down with the state. Now by doing that, if you've gone through this list right here, then you're probably going to be pretty safe and not have to worry about prior creditors of the LLC coming back against you, because you can document you went through and you did all the necessary formalities to shut your company down. If you're setting up LLCs to flip property, if you're setting up LLCs to buy real estate, you want to make sure that after your deals are done and you no longer have a use for that limited liability company, that there isn't an angle for a creditor to come through a dissolved LLC and hold you personally liable. Now, one other thing that I didn't mention here is if your LLC is an active business and you have a retirement plan like a 401k, if you have a 401k plan, then before you hit step 5, you want to make sure you shut that 401k down. Otherwise, it's going to create problems for you with ERISA. And oh, by the way, after that's all said and done, you want to close out your EIN with the IRS as well. Or if you have an entity that is required to file a tax return, then you would file a final tax return. And so let your CPA know that if your entity has been closed out, that this is the final return that you'll be filing for that entity, and they'll form the IRS when they send in that return. Well, guys, that's it. Five important steps you got to go through when it comes to shutting down an LLC to make sure that you don't have personal liability for any creditors and claims that are later brought after that company is closed. Hey, if you want to learn more, you want to get a strategy session set up with Anderson, be sure to look in the show notes. I have a link there you can click on and schedule a strategy session with someone here at Anderson. Or hey, if you just like the videos, hit the like button or the subscribe. Take care.